Hi everybody, Connie here, residential realtor in Greater Vancouver, and I'm joined by one of my favorite mortgage brokers in the industry, Jordan Thompson with Citywide Mortgages. And today, Jordan, I want to ask you some questions about affordability. I know that we've obviously seen lots of volatility in the interest rate market, and concurrently, we're seeing some softening in pricing across the real estate market. So tell me a little bit of a story on how that impacts the final cost, my mortgage payment at the end of the day.
Such a great question. So first I want to touch on the fact that you've talked about that rates have been really volatile. We've definitely had a massive increase in rates, and that's really pushed buyers to the sidelines because there's a lot of fear.
Yes.
Totally understandable. But when you break down the math, it's not as scary as some people think. So for example, let's say you purchased a home a year ago at the height of the market when prices were a lot higher than they are now. So we've seen about a 10% softening in prices. So let's say you purchased a home last year for $750,000. You had a 20% down payment and your rate was about 3.24%. That's with a 25-year amortization. You could have expected a payment of about $2,900. Now, the fact that prices have come down, even with a higher interest rate today of say 5.24%, it doesn't mean that your payment has also doubled. So let's take a look at the math. With the 10% decrease, the home that was $750,000 a year ago is now about $675,000.
Yes.
Put your 20% down payment. So you have a lower mortgage amount. Now it's only $540,000.
Yes.
Your 20% down is also less. And your payment, yes, is a little bit more. It's about $300 a month more. So you'd be looking at a payment of about $3,200. So it's not double what it was last year.
Certainly higher carrying costs, and we know that to be true. And I think the really prudent thing that the federal government implemented many years ago was the stress test. So lots of people, even with rates at 3%, were aware that if rates increased, this is what it could look like. Is that part of your conversation with folks?
Well, absolutely. When we qualify them, we're qualifying them at a rate that is higher, typically 2% higher.
Yes.
So we're making sure that they can afford the payments at that higher payment. With their current income. Absolutely. So the stress test actually turned out to do its job.
Fabulous. So what I'm hearing you say, Jordan, is that it's not all doom and gloom in the market, that interest rates, yes, have increased substantially, but the actual dollar value impact to the buyer is marginal. And the other thing that I'm hearing you say is that being in close rapport with your realtor and mortgage broker team through this buying process will ensure that you make great buying decisions.
Absolutely. It's
amazing.
It's teamwork, and you've got to have a strategy. And together, I think that we can make it a lot better for our buyers.
Thank you so much, Jordan. I really appreciate it.
Thanks, Connie.